Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good weekend, all. Ira Epstein of Linn Associates with your agriculture update for this weekend edition. And we are now on March 2nd, Friday, 2018. Markets are closed in the grains. And as you can see, the beans finished up on the day, 3 cents. Wheat in a correction. I don't think there was any real news in it. I'm not seeing anything to change the drought conditions that we're seeing in the southern plains. But profit-taking, markets over key Bollinger Bands on the daily charts. That's what we had there. And corn just sort of being dragged along backwards and forwards. So what do we look at on these markets? Well, you know that they got terrible weather on the East Coast. The nor'easters hit. They've shut down trains. The Washington, D.C. airport, they moved people out of the control tower. The winds were too high. And, of course, flooding, the third highest ever. But how does that impact the grains? It really doesn't. What's impacting the grains are a couple of things. As you know, President Trump's threatened tariffs on steel and aluminum. Now, Wilbur Ross did clean up a few things that the president said yesterday. We were all wondering, were the tariffs arrowed at somebody or were they broad? They're broad. And right now you've got Mexico asking for an exemption. You got Canada asking for exemptions. Guys, everybody gets an exemption if we do a NAFTA deal. And China gets an exemption if it comes to the table and it lowers its $375 billion. So this is a play by the president to get everybody off the positions and start to get something done. I hope you understand that because it hurts the farm community. Because if we see that exports and China imports half of their soybeans from the U.S. gets cut back, if we see Mexico already starting to cut back massive imports of our corn there, well, eventually we hurt ourselves. Trade wars are difficult, but the threat of them may not be what it is. Maybe the president steps back because people over the weekend come in and talk. If you look at the stock market, you can't tell from this what's going on. Little difficult. I also noticed today that people weren't buying the bonds. The market had sold off on the day. So typically the risk-on trade, if you will, is one thing. Risk-off, remember what risk-off is. Risk-on, you're buying stocks and the like. Risk-off is when you're buying the bonds. You're buying typically the Japanese yen. You might be buying the dollar, which is down today, gold and silver. So we'll see what goes on. When I look at the monthly bar chart, and that's how we start off on the weekly edition, pretty hard to argue this market's anything but up. It's gone up $1.60 since this low point in 2017. When we go to a weekly area chart of closes from this low point right at the beginning of the year, the market has soared back to the upside from 944 to 1060 3/4. So the market has done a heck of a nice job for the American farmer at this point. Here's what the weekly bar chart looks like. And if you put on the swing line study, which connects previous days' highs and lows with each other in a very certain way. It takes into account whether or not this week's high is higher than last week's. Is it an inside week where you didn't take either out? Is it a lower week? Or is it an outside week with a higher close or a lower close? I developed special rules for each. The indicator does it all automatically. And the idea here is if you believe that a trend is made up in an uptrend of higher lows and higher highs, it shows you where those are at. It also shows you that if one were to buy right now, the risk to break that pattern, and that's all I care about, is all the way back to 967 3/4, $1 lower. It's a heck of a break, $5,000 a futures contract. When I take a look at moving averages, and I'm looking at the 18-week moving average of closes and the 100-week, a bullish configuration is normally when the 18-week is over the 100. You know, it hasn't done that since back over here, and I'm going back into May of 2017. It's going to start coming together. So then other traders, and I'm talking market technicians that look at what we call crossovers, will pay attention to that. When we come to Bollinger Bands, understand what a Bollinger Band is. When I look at this sideways action, from sideways action, you break out of Bollinger Bands. 95% of the time, the market will trade within a Bollinger Band. So as I step back over here, back in June of last year, you tried to get through the upper band, didn't do it, and then you just started going sideways. Less and less volatility. All of a sudden, the market in the past 3 weeks has exploded in volatility to the upside. It is certainly tied to what's going on in Argentina with a severe drought. I just saw today that Informa is lowering again their Argentine estimates. I just saw them this afternoon, and they're down quite a bit. So what's happening is the toll is taking its way, and as it's doing so, it adds value to others that might have to replace the major exporter of soybeans, Argentina, and meal. And we're starting to get a bid from that. If you look at the momentum, it is still up. So on the weekly chart, you're breaking out of all this sideways action, putting a floor under the market. How high the market goes is anybody's guess on a weather condition, but you don't want to be too early to sell your crop if you're probably a farmer. In the meal market, momentum's still up. You had the same sideways action. Do you see all this? And from there, eventually you have to get over that 95% rule on a Bollinger Band. So the first thing a market does is it hits it and starts pushing on it. Now, only 5% of the time will a market stay over a Bollinger Band or under it. One of my rule of thumbs is that generally, as long as it's consecutive, each of the days that it's over, it takes away one of those percentages. Does that mean, if you think about 95%, that you go to 5 weeks over, that you have to break back the next week? No. I have seen more than that, but it's a good rule of thumb that I work with. Doesn't mean you have to work with it. It's my rule of thumb. Now you got 4 in a row, so I can afford more next week. Obviously, the first time we hear that Argentina is going to get some rain and the drought has ended or abated, it could be one of two, you'll get some form of a correction most likely. How much? I don't know. But right now, this market gathered another $14 for the week, and that's quite a bit. Soybean oil has overhead resistance. If you look at the daily charts, it's a whipsaw. When you look at the weekly chart, you see the market still very much in a decline. It also just had something else. Look at the 18-day average and the 100-day average of closes. Here you got 33.22 to 33.36. You still got the 18-day in the red higher than the green, and this was last week. This week, you got your crossover under. Now, you get a crossover under, often what occurs is the market goes for a new low on the move. We'll see what happens. What else do you see? I see that as a pretty good resistance point, 33.10 to 19. What else do you see? Well, if you're going to keep the pattern of lower highs and lower lows, this market should not get over 33.31. So the market's starting to define things. The negative is that it won't take much for momentum to start turning back up. And if you believe that momentum leads price, if you're going to be a seller, you want to keep a close eye on that. Is there a reason to be long the market? I always like to cover everything. My concept is when you're under an 18-week moving average, the bias is down. Until momentum turns up, it hasn't turned up. And the market has got a downtrend because it has lower highs and lower lows. So my answer doesn't mean I'm right, but that's how I define, could you be a buyer, should you be a buyer? You take it from there. In the weekly bar chart of corn, you're still pushing out the upper Bollinger Band. There's that sideways action, and from it, eventually, as I said, while the rule of Bollinger Bands is 95% of the time, the market will stay within the bands. A lot of it depends how wide the band is or what is the pattern leading up to this. You certainly had weeks of sideways action here, and when the market broke out, momentum was pointing up. You had the pattern of higher lows, higher highs. Doesn't mean that I'm telling you that the market should be ever a buy over a Bollinger Band, but the pattern is up. It slips back under, finds support at the 100-week moving average in green, and the rest is just what it's been doing, just climbing higher with momentum still pointing up. In the wheat market, the market is up this week over the upper Bollinger Band, just breaking out of it. Now let me explain just breaking out. I think you'd agree we have somewhat sideways bands here. Nothing negative, just sideways bands. Momentum trying to pick up. The pattern is one of a lower low and a higher high, but the bias is up too because you're over the 18-week average. The market makes a run and stops the first time it hits the upper Bollinger Band. That makes all the sense in the world because in theory, if you're believing in the 95% rule that it'll stay within the bands that time, first time you hit the bands, it's often a resistance point. I can go on the charts and prove this over and over. Can you go right through it? Of course you can. There's no magic to this, but you're in a resistance area or in a support area, and you'll see that over and over as that occurs. The market then backs down, closes for the week under the upper Bollinger Band, and then it starts its move back to the upside, back under, so it's keeping itself working higher, but not staying consecutively over that band, and they're starting to push out on it. And this week it really broke out to the upside with momentum up, and now the trend up. So can't argue that a correction's here, but that's about it. In the cocoa crop, what's happened is we're seeing a smaller crop coming. The International Cocoa Organization came out with their numbers yesterday. They see higher demand and a lower crop. Plus, in West Africa, in West Africa, they're getting dryness right now. This is kicking this market up. Now, it's in a pretty key resistance zone of 23.24, the 100-week average, and the upper band. Momentum continues to point to the upside. Certainly still very much a bull market, and I would say the bulls have good control of it here. Sugar's a son of a gun market right now. I heard that the deliveries were hard to be doing on the March sugar. Now, I don't have facts on this. The contract goes off the board. In other words, stops trading, period, and then deliveries begin. And from what I heard, that's one of the reasons the market had a pretty wild week. But for the week, you wouldn't know it looking to the daily chart. The market is still down 26 cents for the week. Nothing has picked up. The market is still looking to me in an overall bearish category on the longer chart. And what it's done is it's widened out its Bollinger Bands, but it hasn't broken them this way or that way yet. See what goes on there. Coffee on the longer-term weekly chart, still very much in a downtrend. Lower highs, lower lows, momentum has not turned up, the bias is down. You've run into resistance against the 18-week average of closes. The cotton market has what we call that mixed bag. You didn't need this rally. What happened is back here, the market created a pattern of lower highs, lower lows. It then fell to the 18-week moving average of closes where it grabbed its footing. The market started back up, and you're continuing that. Are we trending? No. Lower highs, lower lows is not an uptrend. It's a downtrend, but the reason I say it's not trending is because I look at the filter of where the 18-week average of closes is, and you're over it. When the bias is up but the swing line's down, I say you got a big nothing. Momentum, by the way, did turn up on the weekly charts. When we look at the cattle market, you got up a week ago to the upper Bollinger Band. We had bearish cattle on feed reports, and you had fallen back now to the 18-week average of closes where the first support is. A couple of important things. Momentum is finally turned down. Number two, if you take out 116.25, the question is, to do that, you got to be under the 100-day average. If you get under that, then it's the Bollinger Band, and that's a couple of cents away. Those are the things I'm looking at. On the weekly chart, who has control of the market right now? The bulls do, because it's higher lows, higher highs, and you're still over that 18-week average of closes. The negative to it is the bias and the momentum often leads the bias coming down. We'll see what happens there. In the hogs, brand new downward signals. You've got lower highs, lower lows. You closed under both the 18-week and the 100-day average of closes. Momentum pointing down. If this market breaks hard, maybe it targets the lower Bollinger Band. You wouldn't want to see, if you're a bear, this week's high taken out. That could signal that you move back up to the Bollinger Band as a trap for the shorts. Barring that, this market issued what I see, new bearish guidelines to it. I want to talk to you about everything I'm talking about here because I cover it in many ways. Now, I've added features to my research that you may not know about it. We have some people that want to look at my research. They don't care about the trade recommendations. They just want the research. We now offer a commentary-only part of that. And it runs about half the price of my other research, and it covers just about everything except my recommendation. So I think you'll find that very interesting. If you'd like to try the research out, you can. Obviously, the commentary part's going to be the commentary, and if you're on a free trial, if you want to try also just the my recommendations with the commentary, we have it. So we have something for everybody at price points that make sense. But the trial, well, you can start with that as free, and if that isn't a good price point, I don't know what is. If that doesn't suit you and you've tried my trials already and you want the commentary, $20 a month on a yearly subscription, how do you beat that? How do you get it? Give us a call. Go to our website. You can click up here at any time. It'll say Ira Epstein's free offers, or underneath us on many websites, just click there and away you go. I'm Ira Epstein. You have a great weekend, and I will see you all come Monday.